Good day to one and all. This is Dr. Sivaraman of inoindices.com. So I'll be presenting part 2 of tracking the forex market together. The twin webinar, which I present once in a month. And during this particular webinar, I'll be giving more importance to that of the trading strategy along with that of the market reading technique. So I was explaining to you during that other part 1 of the webinar how exactly the forecast algorithm can be used as a guiding factor, and I was displaying the slide pertaining to that of the forecast, what I gave it on Monday, 9th September. So on 9th September, I gave the forecast for the sessions of each day and for the whole week. Today is 11th of September. So I explained that the market will have a dip and firm up during the Japanese session, and which we have seen it. And during the European session, I gave the part 1, and they quickly gained the levels in the case of Euro and GBP, and then later on they made the slide. Then now we are in the US session, and it is 14:02 GMT, 2 minutes past the first 30 minutes of the session. So US session starts by 13:30 GMT, and 30 minutes is over. And you see the swing and firm up moves are happening now in the market. So already it has gone up. So it is very difficult to take a position now. But I'll explain to you the concept. That is more important. And once you understand how exactly the market reading has to be done, then it will be easy for you to trade at ease without much of an uncertainty. And let me explain to you, in conventional analysis, you come across the statistical studies as well as the fundamental studies, technical and fundamentals. And with the help of that, we will be able to derive, in the event if the market goes up, it can go up to a certain level. In the event if the market comes down, it can come to that of the support level. That is how we try to read it. And similarly, if the data is positive, it could be in favor of the currency. If it is negative, it will be against the currency and things like that. But before the release of the data, we unnecessarily develop the fear. And we wanted to know how exactly the market is going to behave. And so in the event of uncertainty, even though we have done the technical analysis as well as the fundamental analysis, the uncertainty which kills the trader. And the trader is not in a position to take a decision whether to go long or whether to go short in a particular currency. So in the absence of such decision or in a confused stage, after the data release, you find suddenly the market either jumps upward or comes down drastically. Then he only repent. Yeah, I was expecting as per the technicals that it has to go up, but I was afraid because the data could be negative, then it could come down. So this sort of arguments could happen in the mind of every trader. And the trader will only repent that I would have taken a buy position, but I was a little bit shaky, afraid, I was uncertain whether to enter long before the data release or enter short before the data release. So this sort of confusion continue to prevail. That is why you find enormous forecast and also the technical analysis and fundamental analysis are being given world over by various analysts. And you find in FX Street, the contributions are being listed and numerous specialized people and technical analysis and also fundamental analysis, they try to give it upfront and still they give the caution that trading is risky. So invariably you find that even though you come to know all the technical analysis and fundamental analysis, still they are not really helping you to take a quick decision in the market. And at the time of taking decision, you know very well you are taking the risk. But you fail to limit the risk or apply a trading strategy so that in the event if my forecast goes wrong, what is going to be my alternative? How exactly I am going to preserve my equity? And this should go hand in hand with that of the market trading or the entry and the exit, what you think of. So in order to simplify the whole thing, because you can read the chart hours and hours together and the duration of varied time frames, and you know the moving averages, we can take it for 200 days, 100 days, 50 days, 20 days, weekly and things like that. Similarly, we can take the charts of 1 minute chart, 10 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, then daily, weekly, monthly. We can take all those things. And ultimately, if you see in fxtrade.net, the people who are giving the reactions, that when I use 1 hour chart, if I suddenly jump into the 15-minute chart, I get confused. And similarly, if I use the daily chart and try to decide on the entry, when the market comes closer to that, I am forced to see the 1 minute chart or 2 minute chart and get confused. And similarly, when you're going for the demand and the supply studies, you find that it could go to the further lower levels or further higher levels in the market. So invariably, you find whether the real demand or real supply is happening in the market, and whether the resistance can really act as a strong resistance for the market to bounce, return back, or whether the support will be the real support to induce the market to bounce back and go up. So we are not in a position to understand using that, which has induced me to go in for the development of the algorithm. And the algorithm, I developed it, it took nearly about 12 years to develop the statistically derived statistical algorithm, a sequence of statistical analysis, and which is giving the forecast. So that is what the forecast, I have shown it in a very simple form. And people might think that he is giving a very vague forecast like this, swing and rise, swing and slide, and things like that. But you know, if you know that swing and rise is going to happen, that means during the dip we can buy, and during the rise we can just book profit. So if you could do it, I'm giving it free of cost here. So I have to necessarily give it in a much refined way to that of my subscribed members. So you should understand my limitations. So here I'm giving it free because I want the traders to get rid of the market fear. So if you want to get rid of the market fear, then invariably you have to understand how exactly the market is being manipulated, how exactly the market is being driven on the upside or on the downside from time to time, and why it is making such moves, and who is doing it, and also how they are in a position to sell huge quantity, how they are able to buy huge quantity and rise the market. And when you see that if you take one lot position in the market in a small account, trading account, if the leverage is 1:200, they take $500. If it is 1:100, they take $1,000. And the US platforms, when they give 1:50 and things like that, they take $4,000 for one lot position. And imagine to move the market on the downside about 50 pips or 100 pips or move it upward, how many lots they have to take it. And when they take such lots and drive the market on the upside or on the downside, will they be taking the risk? Can they afford to take the risk with a huge billions and billions of dollars? Not at all. So when you are cautious and using the trading strategies, when a small money is being used as equity, imagine how the big players will be making the moves in the market. They have to make a foolproof understanding of the traders' pending positions, and only then they can make the moves against them in order to make a decisive profit from that of the market. So simply dropping euro, nobody is going to reward. Simply rising euro, nobody is going to reward, or the respective country is not going to appreciate. That is not the requirement. They want the billions to become trillions. And for that, no bank will be able to accept it as a deposit and give interest. So such money is being used to drive the market. When they are making such a huge moves in the market, can we afford to withstand that? We can, provided we understand their limitations. Then understand their moves beforehand. These are all the two important things. We have to understand their limitation. As long as they are human, they are not gods. As long as they are human, they will have their own limitations. And similarly, anybody who has got a hidden agenda, it has to be revealed in the market. How? Because in the financial market, when they want the money to multiply and money to earn money, then obviously they have to act cunningly against that of the traders. So how they are acting against that of the cunningly against the traders? It is very simple for them. So, they create the market sentiment. They create a bullish sentiment and induce the traders to take buy positions and later on drop the market. Similarly, they drop the market and keep near that of the low, make frequent downward stop and induce the traders to develop the bearish field. And also when you go in for the technical analysis as well as fundamental analysis, they also confirm that the market is going to be bearish. And if you see in fxstreet.net how the people are reacting, when euro goes to 1.3278, I'm going to be the seller. That is what people are writing there. And similarly, 1.5838, I will try to sell. So they miss the opportunity of doing a buy and sell, but instead they have only one alternative of doing a sell and buy. And when the market goes closer to that of the resistance, they want to do a sell and buy trade. But when actually the market reaches the resistance level, they develop the uncertainty whether this resistance will act as a strong resistance or the third level resistance could also be used by the market. So they become uncertain at every given point. So in order to get rid of the uncertainty, one need to know how exactly the market is going to behave. Whether it is going to be an upward move. Because in the chat in fxtrade.net, you find all the newbies ask simple questions to that of the analyst. Whether euro is up or down, GBP is up or down, yen is up or down. And predominant of the traders think that euro yen and GBP yen are the good pairs to trade because there the volatility is more. They ask the questions. So they only learn to ask the question whether up or down. But if somebody says up and another person says down, they are not going to take the positions. If all unanimously say up, probably they will try to take the position. So invariably you find that everywhere the contributions are given to that of the traders. But unless and otherwise, the traders understand the market, they are not going to commit trades. And it is very similar to that. If I am hungry, I can only eat. I cannot ask somebody to eat the food and say that, okay, I am satiated. So it is not possible. For that, I am giving it in a very simple format. Even though it involves a lot of technical studies, I am giving it in a layman's language so that people can really understand. Using a simple tool like a live market code page, one will be in a position to trade at ease without any uncertainty and also in a position to consistently earn money from the other market. So that is why, in order to understand the intentions of the players, the market reading technique is being derived. This market reading technique is nothing but noting down the initial lows and the highs. That is, you come across in the live market code page, that bid and ask and also the high and the low, the net change from that of the previous day close and the GMT time frame. So here what you need to know is that whether the high is breached and the market has gone above, the low is breached and the market has gone below. From what time frame? It is from 3:30 GMT because the players set the initial lows and the highs at 3:30 GMT. From 2:30 to 3:30 GMT, they try to oscillate the market and try to set the initial lows and the highs. And then they use them as the guiding levels. They use the initial lows and the highs as the guiding levels for their counterparts to follow and try to put the counter trades. Because if a trade has to happen, somebody has to buy and somebody has to sell. So the players continue to buy euro and rise it. And if suddenly from 1.3250 it goes to 1.3292, only the ask bid will be showing the higher level, unless and otherwise there is a sell order here. So the counterparts will place the sell orders here, so that when the transaction happens, then you find that level is being marked as a new high or new low, or that particular trade has been executed. So it is not that they can simply put the bid at a higher level so that the market can go. Corresponding asks should also come into the market. Only then it can happen as a trade. And then the high or the low can be set, or the trade level can be established. So for that, the counterparts need to place the orders. So they have got a different mechanisms. And I will not be able to give it in an open public forum how exactly these operations are being handled, because it is their secret, so I cannot disclose it in the open forum. Okay, so they set the initial lows and the highs around 3:30 GMT. It is a convenient time, nothing more than that, because based on various interactions, I got these informations, and it's a very long story. No, it was accidental, and then because I was giving very unique forecast in the market with regard to the trend reversals, and those people contacted me because they will not be in a position to make moves for the unexpected events in the market, like a Gulf war. Now people are talking about Syria war. So whether the war will happen or not, they will not be able to judge it. So invariably, they contacted me, and you know that I gave the September 11th attack, which could happen and which could make US dollar to be the weakest currency afterwards. Then that is what happened. So, even Mr. Francisco Riverola knows about it. On that day, I sent the email to him that I gave the forecast exactly, but I never expected that it will be an unfortunate situation. But from that moment onwards, the US dollar will start becoming weaker and weaker. So for that, they contacted me and got the information. In that, I was able to get indirectly the information, which I like to share it with the small traders. So I can sell it for huge money, but that is not my intention. My intention is to give the appropriate technique to the small traders who are really handicapped with small equity, and they have to still have the urge to earn and also necessity to earn. And in order to help, I have been doing it from 2001 onwards as in association with the fxtrade.com, the various type of interactions with the traders. Okay, it is a very long story. Let me not go into the details. So here what you come across, the initial low and the initial high, they set it. And during that of the European session, they have been going up to that of the initial high and reversed it in the case of Euro. And they have not done the breaching of the initial low in the case of Euro. But in the case of GBP, you see that they made a downward stop on 57.19, 57.28 was the initial low set by 3:30 GMT. It is their convenience, no rationale behind it. And then they made the downward stop and below that during start of the European session and made an upward move. And quickly you have seen during the European session they made a move, but in first 30 minutes they have not breached the high. 58.26 they have not breached, even though they showed 58.5, 58.10 and things like that, but they have not breached it. So we need to understand why they are doing that way. After going to 1.5815, it is it's not a difficult task at all for them to go above 1.5826 or 50, 30 and things like that. Why they are not done it? Because they have their own intentions. We need to read their intentions. And similarly, in the case of Euro, GBP, they just breached the initial high during the European session. But Euro, they breached the initial high during the US session. And now they are holding it above that of the initial high. So what it tells us? So we need to understand that. And similarly, in the case of USD-yen, 100.14 was the initial low, and they breached and they are staying below that psychological level 100. So they have been staying from that of 13:30 GMT for 30 minutes. So what could happen afterwards? So let us study currency by currency, then we will be able to understand. Then CHF, 93.41 they breached and formed 93.04. And 93.58 was the initial high, they formed 93.70. So they made a brief downward stopper as well as upward stopper. That's what the move. The spread, if you see, it is hardly about 40 pips. So they are simply consolidating here, not making any big moves. And in the case of Canadian dollar, you find that they breached the initial low, 1.0342, by about 10 pips, 1.0332, and come above that of 1.0345. So you will be able to understand the relevance of these initial lows and the highs. Then 1.0355 was the initial high. They had gone to 1.0365. So they made a downward stopper. They made an upward stopper and holding between this particular range. And in the case of Australian dollar, 0.9284 was the initial low. They breached and formed 92.76 and come above it, and 92.95 is the current level. 93.18 is the high. They are not breached. Tomorrow, during that of the Asian session, I will note down the initial lows and the highs of tomorrow and show you how exactly they are making the definite moves in the market depending upon the trader's commitment of the positions. Now, after seeing the initial lows and the highs, we are able to understand that they are done an upward stop. Upward move, an extended move in the case of Euro. How? Let me explain to you the type of moves, then come back to this particular slide. Okay. In the market reading, we need to know the importance of the market timings followed by that of the players. So we are at US session now. 13:30 GMT is started. These are all the timings followed by that of the players. Nothing to do with that of the London opening time, London closing time, etc. And they follow these times and try to make the moves in the market. If you want to read them, you need to follow them using their own time frame. So 13:30 GMT US session starts. We are at 14 GMT. Then 20:30 US session gets over. Then in between the sessions, you come across gap time, during which the order flow is not there from the bank with regard to the exporters and importers and currency conversion trades, and they will be in billions. So during that time, they don't make the stop. If they make a downward stop, and happily those people, banks will buy it. So if they make an upward stop, and happily they will sell it. So they don't do it during that of the session. They make such cunning moves only during the gap time. So if you know this is the gap time, then whatever the move they make, if it is a downward move during gap time, you can be rest assured during the start of the session they will make an upward. So you don't require any more information. So all the gap time moves are false moves. Then during the session, the first 1.5 hours they handle the majors, and the last 1.5 hours they handle the majors, and in between they handle the crosses. So if you know these with regard to the market timings, then you can select the right type of currency pair during each time. So after noting down the initial lows and the highs, and just to watch the market, and try whether the currencies are near that of the high or near that of the low, or whether it is above that of the initial high, below that of the initial high, or near the low. All those analysis you can do it with the help of the live market code page. Now let me explain to you the type of moves. See, you can categorize them into three types. A move which happens in less than 30 minutes. They are all quick moves. And they will create the stunning effect on that of the traders. They have to necessarily make such quick moves so that the fear can be triggered. So once the fear is triggered, the traders will go in for a distress trade. That is the main objective of that. And because they have to earn money. Then they do the stop loss, which is a move below that of the initial low for about 15 to 25 pips and come above that of the initial low in less than 30 minutes. So in the case of GBP, they had done the initial low, downward stop, then reversed and made an upward stop. The initial high was 1.5742. I showed you 1.5742. They went above up to 1.5751 and came down below before the data release around 8:30 GMT. Then started gaining the levels. Sorry. Throat. So that is referred as a stopping move. Then a false move is the one. They come closer to the low and reverse and go to the high in less than 30 minutes. A quick downward move before the data release, and as soon as the data is released, that is what they have done it in the case of GBP during European session around 8:30 GMT. They came closer to that of the low and made a downward stop. And here in GBP, sometimes they come up to that of the low, reverse and breach the high, stay there. After the data release, spike it up. That is referred as a false move. In the false move, they don't breach the low or the high. They go up to that and reverse. That is false move. And this false move, they need to do because from that of the high, they drop to that of the low quickly. There are so many occasions we have seen in the case of GBP. They drop from that of the high to that of the low in less than 30 minutes and reverse and breach the high and go up. During shift in trading zone, you would have noticed such false move or extended stop. There are two possible moves. They do it. That I have not explained it here. Extended stop happens during that of the monthly trend reversal times. It is not needed for the intraday trade. Then you come across a move which happens more than 30 minutes and less than 2 hours or up to 2 hours. So that is called as the extended move. Now during that of the 14 GMT, you have seen that they just breached the high and formed the new high in the case of Euro. 1.3281 was the initial high. They went up to 1.3301 after the date. And subsequently you find that they are holding it. They have not breached the high for more than 30 minutes. Then they will make a small slide again for 2 hours before making further runs. So quick moves will be seen during the extended move, whereas during the intentional move, which happens for 2 sessions on the start of the third session, a prolonged move, which will be always slow and firm. So you would have noticed on Monday and Tuesday, they just slowly gained each day a level of about 50 to 60 pips in the case of Euro and GBP. And none of the sellers were in a position to make profit. And people were afraid to take long position because the market move was very slow. And they thought that it might suddenly reverse and drop. So they were hesitating to take a buy. But slowly they absorb all the sells and take it down. Monday and Tuesday. Now today is Wednesday. What they are trying to do? They hold high and lighten their positions before making further runs. Because they cannot continuously accumulate the currencies. And they are all nothing but the positions. It is not actual delivery of the currencies. So when they accumulate the positions, they also need to pay the margins. So instead, what they do is they quickly gain the levels and book profit, lighten their positions, and then try to buy it at the lower level. And with the help of the profit, they try to make higher level buys. When they make high level buys, then the profit should be added so that in the event suddenly anything happens in the world, because unexpected events can happen anytime. And if it happens, then they should not incur any loss. They should not become bankrupt. They should be able to exit with the huge positions without any loss. That is why they do the consolidations for a prolonged period at any level. And they gain about 100 pips book profit and come down. Gain about 100 pips book profit and come down. Make at least 3-4 times, and with a cushion of profit, they try to make the buy at the higher level and make the shift in trading zone. So during that, they make the intentional move. Besides, the swing is the one between the low and the high. During the midsection, they make small moves near the low or near the high. They try to make the small swing. So now they are making the swing between 1.3281 and 1.3301, which is a small swing, higher level swing. Similarly, lower level swing can be seen in the case of USD. So this is how they try to make the moves. Now, coming to the market trading, we need to understand with the help of the net change that what they are trying to do at a given time. Now you find that Euro is in positive net change, GBP is in positive net change, then USDN and USDCH are negative net change, so clear USD weakening move is happening. But when you come to that of the commodity pairs, USD CAD is showing negative net change and Australian dollar is also showing negative net change. It is a contrarian move. Whenever they make the contrarian move, understand that they are handling the respective crosses. So they are handling the crosses of the US Canadian dollar and crosses of Australian dollar. So that we need to understand, accordingly take positions. So first of all, we have to understand the market timing, then the type of moves, what they are making. So I had defined the time taken for each of the moves. So when they are making a downward stop and in less than 30 minutes they reverse, you can take a buy there near the low. Definitely they will go up to the high. You can book profit. Similarly, when they make an upward stop and come below the initial high in less than 30 minutes, you can take a sell there. And book profit during the profit. So if you understand that they are doing only stop and in less than 30 minutes, it happens during session start and session close time, you can take a decisive sell and buy trade near the high, decisive buy and sell trade near the low. Within the session, they don't make trend reversals. Between sessions, they make trend reversals. So you need not become jittery after taking a buy position. Suddenly, Euro might collapse or GBP might collapse. You need not worry about it within the session. Between session, they will try to make alternative moves. Because there are only two moves, either upward move or a downward move. They are alternative. We need to find out after what duration they are going to alternate. In the market, they make extended move followed by intentional move. Extended move followed by intentional move. Nothing more than that. And in between, they make a stop and a false move or a swing. Because 24 hours market, they have to manipulate. It's not an easy job. And they continue to make the moves. We are all only watching, but they are making the moves. Don't think that everybody is trading actively in the market. They are just keeping the market floating so that the traders might be attracted to take positions. It's like a gambling den. In a gambling den, all the machines will be working as if it is so busy. But it is basically an automatic system, and it will give the impression that game is going on, so that we'll be tempted to participate in it. Okay. After the market reading, if you know that they are doing a stop and then you buy near the low, or if they are making the intentional move, any level you can take a buy and you will be able to certainly book profit. And if they are making an extended move, After 2 hours, make a contrarian trade, you'll be able to book profit. So ultimately, when they are making swings, then try to avoid it because it is a mere consolidation. If they are handling between the low and the high in the middle level. Only when the market is near that of the low or near that of the high, try to take positions. And if it is near the low, try to buy any currency for that matter. Not breach the low for more than 30 minutes from the start of the session. By the end of the session, try to take profit, or when the profit is seen for about 45 to 75 pips profit. And once the position makes 45 pips profit, keep stop at entry and remove the hedge order. In the event, the hedging facility is available. So ultimately, what you need to understand is you should be in a position to read the market properly and use the trading strategy appropriately without any fear. Because once you use the hedging, then you know the risk is limited. The position is not going to be closed and you will only hold the two positions and you can handle both the positions like a trader who has got a sell position and another trader who has got a buy position. And if you handle it carefully, you'll be able to book profit. And if the absence of hedging in the US platforms, you don't come across the hedging, you can use the stop. So you can always use 30 pip stop. And if the going is not good for 2 hours, simply close the position and relook at the market. You'll be able to really earn consistent return over the market. You need not feel bad that you don't have the hedging facility. You may book a small loss if you take a buy position and it's not rising it for 2 hours, and if the position is making loss for 2 hours, close the position because they will be making a move against you before making a favorable move for you. So you can determine that and try to take a decision with regard to the move. And always keep in mind, accept the loss when it is small and try to maximize the profit. And for that, you need the trading strategy of keeping a stop, trailing stop in a profit-making position and using the hedge order in a loss-making position so that you don't just like that lose money, because when you continue to lose money in 2-3 trades, we become demoralized. Whoever it is. So we need to control our emotions for that. If you want to really control your emotions, then it is not that you are brave so you can accept $1,000 loss and things like that. Nothing of that kind. Even the richest in the world, if you lose $1,000 in the market, will repent. So that is human limitations. So we need to understand that and try to see that the loss could be only, because as soon as you enter into the market, the position has to make loss. Because there is a spread between the ask. But when the position makes profit, quickly keep stop at entry so that you will avoid any loss to start with. Then subsequently, you try to maximize the profit. This should be done in a very systematic way. Now, so I just entered some orders during the European session and they are not filled it. My limit order in the case of Euro, which was near the low what they have set, because I started the webinar by 9 GMT. They came down actually around 7:45 GMT, but I started the webinar by 9 GMT and kept the order. And I do not want to enter at the higher level because that will be an emotional trading. You know, imagine that it will make further rise, so try to enter around 1.3275. Hardly we can make about 10 to 15 pips profit. Because I always give the suggestions to the traders. Don't go in for scalping. Because once you go in for scalping, your mind will always try to grab when the profit is about 5 to 10 pips. You will not be in a position to maximize the profit. If you want to really maximize the profit, then give gaps between the trades and don't become addicted to trading. And look for good opportunities to enter into the market rather than taking a position and expecting the market to give you an opportunity to book profit, because that will test your patience. If you take a buy position here and try to wait, and it will really test your patience. Once you see 1 pip profit, you will try to close it. Afterwards, they may rise it. So you have to identify the type of move, then try to enter into the market. If you are trying to trade in the case of majors, then choose the early or the late sessions. And if you are entering to that of the crosses, choose the mid sessions. You'll be able to really make profit. Now, these two orders were not filled. And in the case of Euro CHF, I just taken a buy position at 1.2394 at the market because they have been making contrarian move. Making a downward move in the case of Euro, making a downward move in the case of CHF. But now they are making the USD weakening more. That Euro is showing 26 pips positive net change. CHF is showing 34 pips negative net change. As a result, which has dropped further down by 10 pips, 10 to 12 pips from my entry. But I kept the hedge order here, and I'm sure that they are going to rise again and make the contrarian move during the European session, gain the levels in the case of Euro, and you would have noticed during the early part of the day, they have been gaining the levels in the case of Euro during Japanese session especially, and in the case of USDL and GBP. They have been gaining the levels in the case of yen crosses, and now they are dropping. So, at that time, USD CHF, they just dropped, and Euro also, they made the drop and showed negative net change. And they accumulated the buy positions in the case of USD CHF and also yen crosses. Afterwards, they are going to rise USD CHF as well as Euro during this particular session. At that time, you will find Euro CHF will also go up. Then we will be able to make profit. But still, our decision can go wrong. So we have to always keep in mind that as long as we are human, we are bound to commit mistakes. So our decision can go wrong. In the even, I will hedge my position. In the case of crosses, 50 pips will be the hedging order. In the case of majors, it will be 30 pips hedge order. And then I'll try to trade this separately on the downside and trade this separately on the upside. Either way trading you can do, or just you can use the hedging to limit the risk. And once the market goes below, keep stop at entry, let them go to any level and reverse the market and come up. Then I'll try to book profit on the buy side. So this way, coolly you can take the decisions in the market. I think it will take too much of the time. So I have hardly some time left to answer to the questions which I asked here. Okay. Guru Shangvi. For which pair is the Euro forecast, weekly forecast applicable? Euro and GBP are the main currencies. They are traded. Do they not make any moves which last more than 2 hours, but not more than 2 sessions, like 4 hours move or 1 session move? You try to find out whether they are making such moves. Then Greener. Will we see New Year high in October? Yeah, we should be able to see substantial gain in the case of the majors, as well as the gains in the case of the stock market and commodity markets. Extremely sorry for the bad throat. So, any other question? If there are no more questions, then I try to wind up the webinar. I'm not trying to take any new positions now because already Euro and GBP have gone up. So hardly they've gone up and not breached the high after 30 minutes. They are making only an extended move and they are expecting to swing here and lighten their positions. So when they lighten their position, what they do is they hold and sell, hold and sell. But if you buy, you will be struck during consolidation. So it is better to avoid taking position only when they are making quick downward stop and or upward stop. And if you try to take the contra trade, you'll be able to really see profit in the market. So it is not that all the time we'll be able to take positions in the market. There are certain times wherein the big moves will be seen, and we should be able to use that as a trading opportunity. And we have to be an opportunistic trader rather than simply take a position and ask so many people how exactly the currencies will move and things like that. That will only make us to become addicted to trading, and it will not give real profit to us. Okay. There are two more questions. Sangvi. So if same forecast is for Euro and GBP, does it make they are moving these currencies parallelly? No. You might come across the variations with regard to the pip changes. Now, Euro has gained about 24 pips from yesterday's close, and GBP has gained about 69 pips. I explained very clearly the forecast is a guiding factor. Then we have to do the market reading and find out which currency is going to make move more. And also I explained that they wanted to drop Euro GBP cross and also the other Euro crosses. So for that, they gained less in the case of Euro, gained more in the case of GBP. A denominator currency, when it is gained in a cross, then automatically you come across a negative change. So we need to understand that. So we cannot blindly enter into the market, sir. We need to specifically study each currency. With the help of the live market code page, we can do all the analysis. All but how high Euro is going. So Euro is expected to gain the level to the 1.38 in the long term. Yeah, the direction will be the same. Yes, you are right. Okay. Fine. No more questions. So I just wind up the webinar. So basically, what I intend to explain is, I am giving the derived forecast on a Monday webinar. You try to make use of it and try to see how far you can follow it, and also note down the market timings followed by that of the players and try to strictly follow using the live market code page. You will be able to easily get used to that of the market moves, and you won't be requiring any more tools to understand the market. Then subsequently, try to identify the type of moves they are doing it during the start and the end of the sessions, and also mid-sessions in the case of crosses. Then once you read their intentions based on the type of moves, then it is easy for you to take a decision in entering and exiting out of the market. Still, we will be compelled to use the trading strategy because we have the limited resources of equity. So we have to conserve it carefully and try to see that first of all we avert the loss by keeping stop at entry in the position. Then try to maximize the profit. I think that way we'll be able to consistently earn from the market. So I take this opportunity. Thank you all who have come here to listen to my webinar, and also especially to FX Trade for all the help to present the webinar. I give my contact details here, my website address. So you can contact me through my email or my messengers or my phones if you want any clarifications. There is no business promotion here, and it is only to help people who are small traders who want to earn money from the market. And I'll come back again tomorrow during the Asian Session Live Market Analysis webinar by 5 GMT. Thank you one and all. See you tomorrow. Wish you happy trading.